Hello traders, Gary Wagner here. Approximately 11:43 in Honolulu, 5:43 in New York on Wednesday, 8th day of June 2022, and this is the daily report for gold and silver. Gold futures had moderate gains today, resulting in a rise of $3.50 basis the most active August contract. That is about 0.2%. We have August gold futures currently fixed at $1,855.60. We did send out a trade alert this morning. We will cover that in detail when we look at some technical studies. The stronger price in gold was coupled with dollar strength. In other words, they're both running to the upside in tandem. The dollar index is currently at 102.50, up 17 points or 0.17%. We are looking at a daily chart of August gold. We are currently trading at 1855.20. This morning I sent out a trade alert and have just put that up on the screen. Our recommendations were as follows: to buy August gold futures at the market, which were fixed at $1,855.80, and to place a protective stop at 1843. Also, for those trading Forex or spot gold, to buy that at the market, 1853.20 was the current price when that went out, and you should place your protective stop at 1841. Lastly, to buy GLD at the market, which was fixed at 172.82 per share, with a stop at $170.80 per share. As far as our current stop in August futures, which is at 1843, we have noticed a succession of higher lows, this low compared to this low, compared to today's low. They've all moved up a little bit. We put our stop at 1843 to protect us from the 78% Fibonacci retracement. That is roughly at 1844.90, rounded up to 1845. And you have the 200-day moving average at $1,842.20. Obviously, the most important events coming up is the CPI inflation index report on Friday, and that will be followed by the next Federal Reserve's FOMC meeting, which will begin next Tuesday and conclude a week from today on Wednesday. We're looking at a daily chart of the U.S. dollar index. We talked about the fact that we did hit an apex back a few weeks ago above 105. The previous two tops, a double top that we had identified, came in just above 103. From there, we had a solid decline, but the dollar certainly found support at its 50-day moving average. This is that dashed green line here, and it has kind of hugged that as a strong support area. And recently, we have seen both gold and the dollar on a couple of occasions both move in tandem to higher pricing. The question is, will Friday's report show that inflation has either not subsided substantially or actually ticked up? Because we've had a tremendous rise in crude oil as well as food costs last month as well as going into this month. Currently, we have crude oil futures at $122 a barrel. But as you can see from the crude oil chart that I have just put up on the screen, in May, which is highlighted in yellow, we had tops at around 115 and lows just above $100 per barrel. And because the CPI inflation index does include rises in energy costs and food costs, unlike the PCE, which is the preferred index for the Federal Reserve, I think that we'll see the CPI come in close to where it came in last month, which was 8.3, possibly a couple of ticks higher or lower. Maintain your current long positions. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.